Hello friends. Friends, we'll continue our discussion on dissolution of partnership firm. Right? Dissolution of partnership firm. Right? We have discussed that dissolution means that we are closing down the partnership firm, which can be for any reason. Right? It can be by the mutual agreement between the partners, by compulsorily by law, right? Or any other reason. Now, in the very first lecture, I told you that while doing the accounting for dissolution, we have to prepare 4 accounts. Number 1 is realization account. Clear? Number 2 is loan account, partners loan account. Clear? Number 3 is partners capital accounts. Then number 4 is cash or bank account. Clear? So this whole chapter is based on these 4 accounts. Clear, friends? And we started with realization account. Right? We started with the first one, that is realization account. So in realization, what we have done, first of all, what are the steps? The first one is transfer assets and liabilities. Transfer assets and liabilities to realization account. Right? What we are doing here is we have decided to sell our assets and we are collecting the assets and putting those assets in one carton. That one carton is known as our realization account. Clear? So now when you have collected the assets and liabilities at one place, what you will do is you will go to the market and sell the assets. Right? Second is realization of assets. That is, you are selling the assets and you are realizing the money out of that. We have done detailed discussion on this in the previous lectures. Then what you will do is, from the money that you are realizing from the assets, you will pay off your liabilities. For that also, the various provisions that we have discussed. Third is settlement of liabilities. These 3 steps we have discussed in detail in the previous lectures. Is it clear? Now, the 4th step is closing realization account. This is what we are going to do in this lecture. Right? This is what we are going to do this in this lecture. Closing realization account. First of all, transfer all the assets and liabilities to realization account. Then realize the assets and settle the liabilities. For that, you have the various rules which we have discussed in the previous lecture. Like if the asset is sold for cash, what is the journal entry? If the asset is taken over by the partner, then what is the journal entry? If the asset is taken over by one of your creditor in settlement of the liabilities, that in that case there will be no journal entry. Right? In case of liabilities, settlement of liabilities, we say if the liability is paid, that will be paid through realization account. If the liability is taken over by partner's capital, then accordingly we will debit or credit the realization and the partner's capital account. Right? But in this, one thing is common, that everything we will do through our realization account. Why? Because we have already transferred the assets and liabilities to realization account. So we will do all the adjustments from our carton and not the asset and liabilities. Asset and liabilities accounts are closed as soon as you transfer them to realization account. Clear? So we will do all the transactions from realization account. Now, how to close this realization account? If you remember, we have done the revaluation account in case of admission, retirement, change in profit sharing ratio, right? So the realization account will be closed in the same manner as is done in revaluation account. So if the credit side is more than the debit side, it means you have a profit on realization, right? This is profit on realization, and this profit will be distributed among partners in their profit sharing ratio. Clear? So that means if the credit side is more than the debit side of the realization account, then it will result in profit on realization, which will be distributed among the partners in their profit sharing ratio. And if the debit side is more than credit side, then this will reflect the loss on realization, right? This will again be distributed among partners, distributed among partners. Clear? In their profit sharing ratio. Clear, friends? So while you prepare the realization account, your first step should be transfer all the assets and liabilities to the realization account, subject to the conditions that we have discussed in the previous chapters related to assets and liabilities. That is, the fictitious assets will not be transferred. If there is any provision related to an asset, that will be transferred to the realization account. In case of liabilities, we say that we have to take only the outsiders' liabilities to the realization account. Then we discussed about the workman compensation reserve, that which amount will be transferred to realization account. Only the amount of liability on account of workman compensation will be transferred to realization account, and the balance fund will be transferred to partners' capital accounts. Is that clear, friends? Right? Now, let's do a practical problem on this. Let's prepare the realization account. So far, we have been doing the journal entries. From those journal entries only, we can prepare the realization account. Let's read the practical problem. Shanti and Satya were partners in a firm sharing profits in the ratio of 4:1. On 31st of March 2013, their balance sheet was as follows. Right? You are given the balance sheet. Then you have some additional information that on the above date the firm was dissolved. That is on 31st March, when this balance sheet is given, your firm gets dissolved. Then further it states that Shanti took over 40% of the stock at 10% less than the book value, right? And the remaining stock was sold for 40,000. Says 40% of the stock is taken over by Shanti, that is asset taken over by a partner. Then the remaining stock was sold for 40,000. Furniture realized 80,000. And unrecorded investment was sold for 20,000. That is a gain, right? That is amount realized from an unrecorded investment. Then it says that machinery was sold at a loss of 60,000. Machinery was sold at a loss of 60,000. Clear? Clear, friends? Then it says debtors realized 55,000. There was an outstanding bill for repairs for which 19,000 was paid. Unrecorded liability. Prepare realization account. One thing important that I forgot to tell you in the previous lectures, please make one important note. This is a very important note relating to realization account, that if information is not given regarding amount realized from an asset, then that means then we have to assume that asset did not realize any amount. Right? If an asset is appearing in the balance sheet, right, you will transfer that asset to the realization account. But if there is no information regarding the amount at which that asset is realized, then we assume that that particular asset has not realized any amount, zero value. Clear? So that is one important note. Okay, please do remember this. Now, let us start with the problem. Let's start making the realization account. Let's prepare the realization account, right? Now, let's see. Please, friends, you make proper formats, okay? Now, what is the first step in realization? The first step is transfer assets and liabilities to realization subject to the conditions that we have discussed in the previous lectures. Please do not forget that. Clear? Now, see. First, talking of assets. What is the journal entry for transferring the assets to realization account? Journal entry is realization to assets. We are closing the assets account, so the assets will be credited. Clear? What are the assets? Bank. We are going to transfer the bank to realization? No, because bank is already in the liquid form. We will transfer only those assets to the realization account which we are going to sell in the market, and we are going to realize money from them. Clear? Debtors? Yes. Yes. We will transfer debtors amounting to 60,000. So I will say to debtors, that is 60,000. Clear? Next, stock 85,000. Yes, we will transfer. Furniture 1 lakh. Yes, we will transfer. Machinery 1,30,000. Yes, we are going to transfer all these three items. So I'm going to write here to stock. Stock is 85,000. Then to furniture, we'll transfer all the assets at their book values to realization account, right? To machinery 1,30,000. Clear? What else on the asset side? We have the Shanti's current account. Will it be transferred to the realization account? Are we going to take the Shanti's current account to the market and going to realize amount from that? No. This current account, I will tell you where it will be transferred. It will be transferred to partners' capital accounts. So in the realization account, we do not have the role of Shanti's current account. Now looking at the liability side, see the creditors of 45,000. What is the creditors? Creditors is our outside liabilities. And yes, we have to consider the outside liabilities by creditors. Right? The amount is 45,000. Now, what is the next item? Workmen compensation fund. Do you have any liability against the workmen compensation fund? there is no liability standing against the workmen compensation fund. So what it means that the whole fund will be transferred to partners' capital accounts and not to the realization account. This we have discussed already, right? Then Satya's current account, again no. Capital accounts, no. So that is all we have in case of transfer of assets and liabilities to realization account. Is this much clear, friends? We have transferred all the assets and all the liabilities to the realization account subject to conditions that we have discussed in the previous lectures. So I will request all of you to please go through the previous lectures first. Clear? Now, what is the second step? Second step says you have to go to the market and sell the assets. Go to the market and sell assets. Realize assets. Now we have the information regarding these. The first is stock. It says Shanti took over 40% of the stock at 10% less than its book value. What is the amount of stock? 85,000. What is 40% of this 85,000? That comes to 34,000. It is taken over by Shanti at 10% less than the book value. If a partner is taking over the asset, what is the journal entry? We have discussed it in the previous lectures. The journal entry will be partner's capital account debited because the amount of asset that will be adjusted through the partner's capital accounts. Because ultimately what we are doing is we are recovering that amount from the partner. If you have to recover the amount from the partner, you will debit the partner's capital accounts and you will credit realization account. So I can say by Shanti's capital. This is for stock. Now 40% of the stock is 34,000 and this has been taken at 10% less than the book value. So that means it is taken over at 30,600. Clear? Then it says the rest of the stock is sold for 40,000. Furniture realized 80,000. Unrecorded investments realized 20,000. Machinery was sold at a loss of 60,000. That means the machinery costing 1,30,000 was sold for 70,000. Right? Debtors realized 55,000. Now all this will be done through realization account. Entry will be realization to bank. So I will say by bank stock comes to 40,000. Then you have furniture. Furniture is 80,000. Then you have unrecorded investments of 20,000. Then you have machinery that was sold at a loss of 60,000 and if you see the book value of machinery is 1,30,000. So that means the machinery is sold at 70,000. Just try to interpret the language of the question, right? If you are successful in interpreting the language correctly, then you will be able to do the question correctly also, right? So that is important. And the debtors realized 55,000. So this total comes to 2,65,000. Clear? Anything else related to the assets? No, we have done all these 3 points that were related to assets. Now regarding the liabilities, they say there was an outstanding bill for the repairs for which 19,000 was paid, right? And we will also assume that the creditors of 45,000 have been paid because obviously we will have to pay to the creditors. We can't go off the liabilities like that. We have to pay the creditors. So if the question is silent, we will assume that we are paying the outside liabilities. Clear? If the question is silent related to the asset, that means the asset has not realized anything. But if the question is silent related to a liability, outside liability that is transferred to realization account, that means liability has been paid. Clear? Now, what to do with the liabilities? We are completed 2 steps. What we have done is we have transferred the assets, we have realized the assets. Now it's turn for settlement of liabilities. What are the liabilities? If we are going to settle the liabilities, I will say to bank, it is the payment. Right? First is we will pay creditors of 45,000. Then there is an outstanding bill for repairs that was paid, that is 19,000. So this total amount is 64,000. Clear? Anything else related to the realization account? We have done the 3 steps. We have first transferred the assets and liabilities to realization account. Then we have realized the assets. The assets might be taken over by the partner's capital. Here Shanti is taking over 40% of stock. Right? The remaining assets are sold for cash or bank. Then third step is from the money realized, we are settling the liabilities. We have to pay the liabilities, right? So we will pay the liabilities. We are paying creditors and there was an unrecorded liability of outstanding bill related to 19,000 that was not appearing in the books. Clear? Now can you tell me which side is more? Debit side is more or the credit side is more? Just check on yourself whether the debit side is more or credit side is more. In this case, debit side is more than the credit side. Right? Remember this. If debit side is more than the credit side, this means it is a loss on realization. You have paid more than you have recovered. So if this is a loss on realization, I will say by loss. And this loss will be transferred to the partners' capital accounts in their profit sharing ratio. Sure. These will be transferred to Shanti capital account and Satya's capital account. What is the total amount of loss that is being transferred? The total amount of loss is 98,400. Right? So this will be distributed as 78,720 and 19,680. Why? Because the profit sharing ratio between them is 4:1. Clear? So this total comes to, this way we have closed our realization account, 4,39,000 and 4,39,000. Clear, friends? I hope you are clear about the realization. Just remember these 4 steps. First of all, transfer assets and liabilities to realization account. Right? Collect all the assets and put it in one carton. That carton is known as the realization account. Then what you have to do is you have to take that carton to the market and sell the assets. Realize money from assets. Then from the money that is realized, you will settle the liabilities. You will pay the rent, you will pay to the maid, you will pay to the newspaper, right? This way the business will also settle the liabilities from the amount realized from assets. The order for settlement is governed by section 48 of Indian Partnership Act 1932. Clear? So in case of realization, we will talk only of the outsider's liabilities. We will not talk about the partner's loan. We will not talk about the partner's capital. We will only talk about the outsider's liabilities. Clear? Then after doing all these steps, the last step will be closing the realization account. For that, you have to identify whether the credit side is more than debit side. In that case, there will be a profit on realization. And if the debit side is more than the credit side, there will be a loss on realization. In both the cases, whether it is a profit or it is a loss, this will be distributed among the partners in their profit sharing ratio. Clear, friends? Clear? So this is all about the realization account. Clear? Now I told you that we had to do four things. We have done the first thing, that is realization account. We have done. Now talking of loan account, what to do with the loan account? Basically, there is no need to prepare the loan account. What you have to do is, if you remember section 48, section 48 says the first you have to pay outsiders liabilities, then secondly, who is paid? These outsider liabilities will be transferred to realization account, isn't it? Second, we have to pay partners loan. We have to pay partners loan account, right? So the amount of partners loan that is standing in the balance sheet, it will be paid after the outsiders liabilities. Partners loan will not be transferred to realization account, right? Will be paid after outsiders liabilities, right, as per section 48. Clear? So at the time of settlement, when you pay the partner's loan, you have the partner's loan account standing in your balance sheet on the liability side. Remember, when you do the retirement or admission, when there is a partner's loan, we transfer that loan account, we transfer the amount of that loan to his loan account. In case of retirement, the amount which was due was transferred to his loan account, and then we prepare the loan account. Then loan account is settled. Here the partner has directly given the loan to the firm. Here is no retirement. So the amount that is standing in the loan account, that will be reflecting in the balance sheet on the liability side, because it is the liability of the partnership firm to pay back the loan given by partner. Clear? When you will pay that partner's loan, on payment, what will be the journal entry? The journal entry will be partners loan account debit to bank account. Simple. Liability is closed by debiting that liability, and we are paying, so the bank account will be credited. Very simple. This is the treatment of partners loan. That on the settlement, partners loan will be paid after the outsiders liabilities. After settling the outsiders liabilities, we will pay partners loan. It is specified in section 48 of Indian Partnership Act 1932. On payment, this partners loan, on settlement of liabilities, this partners loan will not be transferred to realization account. Remember the conditions that we have discussed in previous lectures, right? So on payment, the entry will be very simple. Simply we will say partners loan account to bank account. Clear, friends? Try to understand the journal entries. If you can pass the journal entries, you can prepare the accounts. If you are clear about what we have discussed so far, then we have completed 90% of our chapter. We have completed 90% of the chapter. If you have understood all the journal entries relating to transfer of assets, relating to realization of assets, relating to settlement of liabilities, relating to unrecorded assets and liabilities, right? Relating to workmen compensation, clear? Related to the expenses on realization, how to treat those expenses on realization. If you have understood all those things, then preparing realization account and the other accounts is very easy. Now what we have done is we have done the realization account and we have discussed the loan account also. So what we are left with is partners capital account and cash or bank account. In one way or the other, we have discussed this also. We have discussed the journal entries regarding these two accounts. There is just a small information that we will be doing, and then we will be solving the practical problems on these two, covering the aspects. Clear? Clear, friends? I hope this realization account is clear. This is very important from dissolution point of view, right? Then section 48 and partners loan is clear to you, right? So if you have any queries, just send me an email at ksjteaching@gmail.com. Clear? So in the next lecture, what we are going to discuss is about the partners capital accounts, right? So in the next lecture, we are going to discuss about the third thing, that is partners capital accounts. We have done realization, we have done partners loan. In the next lecture, we will start with partners capital account, and we might do the bank or cash account also, and we will do the practical problems. Clear? Clear, friends? So that's all for this lecture, friends. Thank you so much.